let's turn to page 353 in our book. And just on the other video, I forgot to tell you that you're going to go ahead and calculate the other time cards or the other earnings for the other three employees on that 12-1 work together worksheet. So now we're on we're on payroll, and everyone knows, because most of you guys are working, that when you start a job you have to fill out what's called a W-4. And here's kind of an example of what one looks like. So when you start working, they need to know, in a sense, how much to take out of your paycheck for federal taxes. You will be given an allowance, one allowance for you and one allowance for every child that you may have, and for your spouse if you're married. So the more allowances you have, that means the less they will take out in taxes. Now, some people will go ahead and say 0. So if you don't want to pay Uncle Sam come April and you make a lot of money, or not even a lot of money, but it just depends on where you fall in the tax tables and what your yearly salary is. Some people will just go ahead and say 0. That way they know that come April they won't owe any money. So on page 353, you have an example of some tax tables. And basically, if you want to know how much money should be taken out of your paycheck for federal taxes, a tax table similar to this is always online. Okay, so the current one. And so you can see here's 0 allowances, 1 allowance, 2 allowance, 3 allowance, 4 allowance. Okay, so like we said, you get an allowance for yourself, you get an allowance for a spouse, that would be 2. If you had 2 kids, that'd be 2 more allowances, so that means you could have 4 allowances. You're going to have the least amount of money taken out of your paycheck, okay? Some people, like I said, they'll have 0, so they'll have more money taken out of their paycheck. You're using these tax tables only to calculate how much they're taking out for federal taxes. This doesn't have anything to do with state taxes, it's just federal. You also have 2 tables. There's one table for if you're single. Let's flip the page. There's another table if you're married. So if you should go look online, there are actually 2 different tax tables. There would be a different one if you were paid, this basically is twice a month. If you were paid weekly, there would be a different table. If you got paid once a month, there would be a slightly different table. So you have to make sure that you're, matching up whether you're single or married and how many times the month you got paid. So now we're going to go to our 12-2 work together. So that's where I'm getting all of this, okay? So over here it says that John Clausen, he's married, he has 2 allowances, and his total earnings were $1,360. So we need to calculate how much we're going to take out for federal taxes. So we're going to come over. We know he's married, so we can't use this single table. We have to come over here to the married one. And it said he had 2 allowances and that he earns $1,360. Now look at our boxes. It says at least but less than. So let's go find 1,360. And you can see there's 1,360 here, but there's also 1,360 here. However, if we follow the column headings here, this one would be but less than 1,360. Well, since he got paid 1,360, it's not less than, so that means we're going right here with this one, right? 1,360. So you have to be real careful. So we're going to go across because he said he had 2 allowances. So that's 0 allowances, 1 allowance, and $52 would be 2 allowance. So that means they will take out $52 in federal taxes. So that's what the table's for. So we'll put $52 here. Now, We also need to calculate Social Security. And so we talked the other day about Social Security. And Social Security isn't just an old folks thing. So they take Social Security out whenever you start working a little bit. It would be for, let's say that you're married and your spouse passes away. You have children. Your children would get this. They call it SSI until they're 18 or 21, depending if they're going to college or not. So that comes out of that pot. Obviously, if you're retired and you're 62 and over, that's where that comes from too. We've had a lot of wars going on, conflicts going on. We have people going overseas and dying in combat or, passing away overseas. Those people who leave minor children, children under the age of 18, they will get what comes from this same pot, Social Security. So you can see where it covers a lot of different things and not just old farts. So now, here we go. How do I calculate how much they're going to take out of my paycheck? Well, it's gross pay. This is gross pay because they haven't taken anything out yet. And Social Security is 6.2%. Okay, you multiply it by 6.2%. So we're going to take 1,000, I'll get a calculator on, 1,360 times 6.2%, and we're going to come up with $84.32. So that is the amount that will be taken out of your paycheck. Now, Medicare, they're going to take out 1.45%. And as far as I know, that is like if you're 65 or older, when you no longer have health insurance because you're retired, then actually you pay for it. It comes out of your paycheck. Okay, it's not like it's free and you get free health care when you're retired. You actually do have a premium, and it depends on how old you are. Some people are still paying almost $300 a month for that health insurance. So it's not like they don't have to pay anything for health insurance. So 1.45% of your paycheck. So if your paycheck is $1,360 times 1.45%, that means they're also going to take an additional $19.72 out of your paycheck. So at this point, this is considered gross pay, total earnings, gross pay. And they didn't give you enough room, and I'm going to go ahead and have you calculate what your net pay would be. So your net pay is going to be the $1,360 minus the $52 minus the $84.32 minus the $19.72. Okay, so $1,360 minus $52 minus $84.32 minus $19.72, and hopefully it's $1,243. Is that right? I'll put it up here right now, $1,243.40. Whoops. I'm just putting, don't you put yours down there. I'm going to just redo it. That doesn't even look right. $52 plus $84.32 and $19.72. So there's $156.04, and what we call that is deductions. Okay, so the amount of money that they took out of our paycheck. Federal income tax is a deduction, Social Security is a deduction, Medicare is a deduction. So we have a total of $156.04 worth of deductions. So I'm going to take that from 1,360 minus 156.04, and I get, I didn't think mine was right. So then it's $1,203.96. So that would be net pay. So I'm going to have you calculate net pay for all of these, okay? So there's that. So going back to our W-4, you calculate your number of allowances. Now, if there was you, your spouse, and 2 kids, yes, you would have 4 allowances. Now, let's say that you didn't want 4 allowances because you wanted to make sure that maybe you wanted to make sure you got all your money back at April. That way you can go on vacation. Some people don't want to see it in their paycheck every month. They want to wait and hold a big lump sum so that come April they know they're getting a refund. Totally up to you. Or maybe you worried that you're going to owe them money, so you want to go 0 allowances. So you can say on your W-4 0 allowances. And you can always change this at any time. You just call your, whoever's in charge of the payroll, and they'll help you change that, okay? So that is using tax tables to calculate federal taxes, and then, of course, calculating Social Security and Medicare.